Back to cash flow management. Remember, this is where you start, and this is where you land, and this is where you monitor your cash flow on a daily basis. Everything you've done up to this point is building the information that feeds into that one single sheet. That's your master. That's where you are going to review your cash flow on a daily basis. So let's go back there. If you haven't yet done that, enter the name of your company. And we started the projection on January 19th, so let's leave it there. If you're starting on a different date, then change that date. All right. What we want to do is, first of all, enter the amount of cash you've got in your bank, the current amount of cash you've got in the bank. You want to go to your account, to your financial statement, to your balance sheet, and you get that last amount in here, or you can get the current amount from the bank, put it in here. So let's say you've got $15,000 in the bank, and you've got a $50,000 line of credit. Enter that in here. All right. From this point on, it's easy. On a daily basis, enter the actual amounts that you have either received or paid. So the net income, the accounts receivable, how much you've actually received, how much you actually paid, any credit cards that needed to be paid, any other payables, any federal sales tax that you owe, any capital purchases that you've made, trucks, tools, any financial activities that you've made. Okay, how much have you actually paid against the loans? Let's use some numbers in here. 15,100. And now we have 71,000 in receivables. We paid 68,480 payables. We paid federal tax 2410. And we have no financing whatsoever. I'd say we owe the bank $10,000. Okay, we have $171,000 in the bank. We decided to pay off the line of credit, but we don't want to use up all the money, so we pay $5,000. Okay, so here's the picture. We've got $176,000 in the bank, and we owe $13,000 to the line of credit. We have $35,000 outstanding. That's it. Now, if you look to the end of the year, you can see as you progress, you will see all the numbers being populated as you progress. And that'll give you an idea on where you are cash-wise. What you want to do is make sure that this cash closing balance is always in the surplus. Always leave yourself enough money to carry on for at least 60 days. So what you're looking for is 60 days for overhead, 60 days for payroll for your crew. Once you know that amount, always make sure that you have that amount in. So if you run out of cash and you're paying suppliers, you have to make sure that you're still afloat. So you always want to make sure that that money in here equals, as I said before, equals enough money to pay payroll and overhead for 60 days. And the reason it's 60 days is if you do 30 days and your cycle is 30 days collection, then you could run into trouble. So if you could do 60 days, you have enough time to collect that money. That's it. That's basically it. So from this point on, you need to monitor this page on a daily basis. And if there are any changes as you progress with sales, accounts receivable, this needs to be updated regularly. And the overhead is static, usually static for the year. You don't have anything to do with it. But your cost of goods have to be updated as well. But again, that gets populated from your sales. So that's easy enough. If you buy any assets, if you sell any assets, that has to be updated. Okay, once you've done that, you're done. Remember, that's how you monitor your cash flow from this point on. Good luck.